And a very good Sunday morning to you. We welcome you in for Fox 5's On the Hill Live this Sunday morning, April 6th. We're going to begin on the headlines this morning. I'm Tom Fitzgerald. It's been 2 days now since President Trump's steep tariffs caused a massive stock market sell-off. Losses in the market approached $5 trillion. The Dow tumbled more than 2,000 points Friday, totaling 4,000 points in just 2 days. The S&P and NASDAQ fell about 6% each on Friday, the largest losses since back in 2020. What should investors be thinking about this Sunday morning as we are about to head into this week? I want to welcome back in friend of the program, Mark Avallone. He's the president of Potomac Wealth Advisors. So, you know, now that we've cut the cord and we are now in this slipstream, what should be our thought about what we saw on Friday?
Well, what we saw was the president made good on a promise that he made, but very few of us understood the severity of what they would roll out. And the global response has been pretty strong, and that's what the concern is.
One of the descriptions the president has used in talking about this was that this was surgery on a patient and that the patient survived. But, you know, looking at social media, you just can see people listing some of the losses they had on their portfolios. What should they do tomorrow morning? Because there's probably going to be some news that is startling to them as these markets open up again. And there's that urge to do something. Is doing something a good idea at this point?
Well, first, if this was surgery, I hope we have some really good post-op docs because this was some massive surgery. And these drops are historic. We haven't seen the likes of them since COVID. And they really wiped out a lot of value and created a boatload of uncertainty. Investors, unfortunately, it's one thing when you're operating against Department of Labor statistics or interest rate forecasts or earnings outlooks, but when it's an exogenous event, something unpredictable, it's very hard to map out a new investment strategy. We saw that with COVID. And if you reacted during COVID, which came out of the blue, you lost money in the sharp rebound. The risk to investors are twofold. One, you stay in and this tariff thing drags on, or you get out and we have a V-shaped recovery like we did in COVID. Therefore, investors are kind of left staying put might be the best strategy. But if you want to adjust it a little bit down just to sleep better at night, or if you're a young person and you're saying, this has been my chance to get in, I am a long-term investor, I would adjust a little, not a lot.
So to use the terminology, is the long game what you need to be thinking about here, that eventually at some point, we can't say right now when, but eventually at some point, this is going to start to trend back up, and it's better to stay in for the long haul to recoup what you may have lost on Friday?
Well, it's true. We've been through a lot of tragedies as investors, a lot of shocks, and this hopefully is just going to be one of them. There's also a chance Congress takes the right to tariff back from the president. But again, if you want to adjust downward, if you're nearer to retirement, but also remember, for a very young person, stocks are a lot cheaper than they were a few weeks ago.
So take me inside your world a little bit, like what Friday was like. What were those phone calls?
My clients are very, I don't want to say very well trained, but they, I guess, for lack of a better term, they understand this. So if you're with a good advisor, they should be educating you that shocks, even as severe as this, can be quite painful and disappointing, but not to react emotionally.
Well, so they call you. Who do you call? Your contemporaries, what are you talking about amongst each other?
I watch Fox 5, okay?
Good man.
And, you know, you take in what you can, and you sort out the noise from the news. There's a lot of good news out there. You want to make sure you're getting good sources that are not emotional.
But is the sense here that this was an unnecessary move, or was the sense that, listen, we've had an imbalance when it comes to tariffs that a lot of people have not been paying attention to, and there is an inequity in our relationship with our trading partners? Yeah,
there may have been inequities, and that's what diplomacy is about. And that's what negotiations are about, mostly in private, not on a public stage, because companies like China are not usually the type of powerful nation that are just going to cave publicly. So there was an issue. I think it could have been dealt with perhaps a little bit more delicately.
And, you know, some of the previous tariffs in the last century have been used as an example of what we're seeing right now. But it seems that we are in a remarkably different world right now where there is global trade on a scale which wasn't unimaginable in the 1920s.
Yeah, globalization was a great boon for American consumers. It lowered prices because goods were produced so much cheaply overseas. There was pain in certain areas of the country. They want to fix that. That's a long-term problem. Right now, we have a short-term issue with the stock market.
So we're going to wrap up on this segment for a moment. Just some quick bullet points right now before we do.
Go ahead.
What's the one thing people should keep in mind?
That stock market investing is a long-term proposition.
All right, Mark Avallone joining us this morning. We appreciate you guiding us through this. I don't think it's the last time we're going to talk about it as this rolls out.